What's going on, guys, and welcome to another video. So for this week on SRG Property, what I want to talk to you guys about is cash flow versus capital appreciation, and which one is right for you in your investing journey, or if you're just looking to find out a bit more information. So I think it's best to start with the differences between the two and then go from there. Capital appreciation. What is that? Capital appreciation is basically when the value of the house you purchase goes up over an extended period of time. So let's say, for example, you find somewhere, right now I'm in Notting Hill, you find somewhere lavish in Notting Hill for, let's say, $1 million, let's just get wild with it. We'll say £1 million, you find a nice house, flat, whatever, for £1 million in Notting Hill. Over 5 to 10 years, house prices tend to either go up or double in value. So the next 10 years, you come back and that house that you bought for $1 million in 2021, post-COVID, is now worth, let's say, 2.5. So over that period of time, the value of your house has gone up by £1.5 million. So that's capital appreciation, so the value of the property going up. That has many benefits, i.e. if you just want somewhere to park your money and just let it sit and let the value go up, and then let's say, for example, you want to retire in the next 10 years, or you want to recycle and pull some money out of that property, that's going to be extremely beneficial for you. On the other hand, the other side of the coin is cash flow. Now, cash flow basically is, let's take this same £1 million property in Notting Hill. Let's run with this. I'm in Notting Hill, so we're just gonna run with it. Yeah? Now, this property is cash flowing you. So what cash flow basically means, it means the amount of rent you get minus all of your expenses. So let's say, for example, this rent is £2,000 per month, minus all your expenses, say £500-600, you're left with £1,500 cash flow. Yeah, that means the profit that you're getting. Now you're getting that cash flow, that profit every month for however long. That could be for the next 10 years, 20 years, or even 5 years. It really depends on how long you would want to look after the property for, or have the property for. So the benefits of cash flow is, let's say, for example, you're in a job you don't like, or you want an extra source of income to supplement what you already have, then cash flow is the right investment strategy for you. Personally, I'm looking for properties which cash flow well. I'm looking for cash flow because although I'm happy with my job as an influencer, I do feel like I would want something to kind of supplement that income, something that I can put aside into a savings pot, i.e. maybe reserves, or to use in other investment vehicles. So that's the main difference between cash flow and capital appreciation. In terms of what's right for you, I'd say it's best to kind of research, dig deeper into those two things, and then find out what you feel suits best for your circumstances. I've spoken to friends who are investors who say they mainly invest in properties for capital appreciation, whereas I've got some people, myself included, whereby they want an extra passive income. So they want something which is just coming in every month. That might mean you have to put in a big chunk in the beginning, but then from there on, you're just getting a passive income for however long, and then you can also pass that property down to family or friends, and then they could be getting a passive income. So everybody's a winner. But yeah, guys, I hope you enjoyed that video. Tried to keep it as short and as sweet as possible. If you like this video, please like, comment. I was about to say subscribe, but we're not on YouTube. Like, comment, share, repost, and yeah, stay tuned for next week's video. Peace.